got my big boy glasses on because we about to get technical for a technical guy. IT. So, had to make sure I'm prepared, ready to go, got my numbers on the board, accurate numbers, because gotta be technical, right? So as you can see, another velocity banking scenario. Here's the situation, right? 49-year-old individual. The goal that I have for them, debt-free in 7 years or less. Can I do it? Let's see. This person works in IT as an analyst, all right, making $38.96 a month. Expenses, $3,549. Here's their debt, $183,897. That's mortgage, cars, student loans, credit card. And their cash flow starting September 2018, $347. Okay, that's where they're at right now. And in 7 years from now, we're going to be retired, debt-free, and a good friend of Denzel, right? So, here we begin. Line of credit. As you know, we have to get our debt weapon in order to get this going. We already have cash flow, so I can begin right off the bat. Line of credit, $5K. Here's the interest rate, 9.25. Divide that by 30 days, you'll get this number right here. That is what he will pay in interest on any given day for any outstanding balance on that specific day. Okay? The first debt that we're going to tackle to kill the fastest and to also increase our cash flow the fastest, right, is the student loan debt. Here's where it's at, $6,521. Okay? His cash flow is this, $347. Times that by 12, you get this number right here. That's going to be my chunk out of the line of credit. Okay? Now, as soon as I make this chunk on the student loan, I significantly lower the balance. I satisfy the month's payment. The interest gets cut off, right? Which provides me cushion for the interest that I'll pay here. It'll offset, all right? And here's how it works. His income is going to get dumped. $3,896 is going back into the line of credit after I made my chunk. That's what's going in. What's going out is his overall expenses. What stays in is the $347. Do the math, 12 months, done. Done. Or even less. Okay? As soon as this is done, he's still going to have to satisfy the line of credit. Okay? It'll still have an outstanding balance of $1,000 or so. We'll have an extra 1 to 2 months to kill the line of credit after we killed the student loan debt. The results are I save over $1,000 in interest over here on the student loan. I killed $6,521 in 1 year as opposed to a 6 years, I believe his student loan is. 6 years, 5 years. Okay? And I increased my cash flow by $117 because that's what he was paying for the minimum payment. Does that make sense? Is you feeling it? Are you feeling the energy? Okay? Can I keep going? I'm gonna erase this. Is that alright? Okay, cool. So we just increased our cash flow $117. We killed debt. Alright? Now, the next thing we're going to hit is a credit card that he has. Alright? This is where I'm going to need my notes. my notes. You gotta have notes, man. The only way to do things right. Avoid making mistakes. Look, so he's got a credit card. Next. $3,923. Real easy. We're just gonna make a chunk. Boom. Of the 3,000 to that credit card. Right? From the line of credit. Okay? Our cash flow, okay, this is what goes in. Oh, hold on. This is the chunk. That's the chunk. 38.96 goes in. Guess what? My expenses are lower now, right? So less is going out of the line of credit, therefore I'm paying less in interest. And I made a mistake. Whatever is 117 plus 347, do the math. Let me know. Tell me. But that would be what stayed in. I didn't even write that down, man. Damn. Because you know I'm bad at math. Really bad. Yet I'm trying to tell people how to get out of debt. Like, what? But with that, with this credit card that he has, it's 0 interest. Alright, so he's not paying any interest over here. He would only be paying interest on the line of credit to avoid paying interest over here before the expiration date. Right? Now, he was paying $166 to that credit card. So that will be our increase in cash flow, along with the 117, along with the 347. I'll have a total cash flow of 630. Yeah, 630. And this debt would get killed in 6 months or less. Okay, 6 months or less. That's a quick one. That's a quick victory right there. Increased cash flow of 166. Okay? And now, here's what we got to do. Because he has a mortgage. Okay? He's got a mortgage. That's the last debt that we're going to fight. Okay? But in order to go into battle correctly, got to be prepared. Alright? So, what we're going to do, after we've killed the student loans and the credit card, we're going to increase our line of credit to 10K. Alright? Because our cash flow went up. Alright? So when we attack the mortgage, okay, think about the timeline. We're 1 year and 6 months out from 2018 of September. Okay, so his 2-day balance of his mortgage is $136,000. 1 year and 6 months from now, it should be at 120,000 or 117,000. So I'm just gonna say 120, right? Would be the current or the future. It would be the future balance of the mortgage. He's paying $1,202 a month towards the mortgage. Interest rate 3.25. Right? So what are we going to do? If his cash flow is 630 times that by 12, you get $7,560 which will be his chunk. Year one on the mortgage out of the line of credit. Okay? Let's say his income stays the same, and he does nothing else. Okay? Income stays the same, right? Putting in, he's still dumping the 3,896 going in to the line of credit. 3,266 goes out for expenses. 630 stays in. Okay? That's if he did nothing else, didn't get a raise, just kept living the same lifestyle. This mortgage would be paid off in 72 months. That's exactly 6 years. 6 plus the 1 year, right? Plus the 6 months. 7.5 years. Just close. Now, what if all he did was get $1 raise at his job? $1. Do $1 times 40-hour weeks, 40 times 4 weeks, times that by 12, that's an extra $1,920. Take out tax, let's say $1,500. Okay? If all he did was get a raise, right, of $1, his first year chunk would be that. But his second year chunk, he would have the ability to put in to make a $9,250 chunk. If that's the case, I'm going to increase that again to $15K or even $20. My credit will allow it. His credit's going to be booming, right? Because he's making chunks of just under $4,000 each and every month. So his credit's going to be rocking and rolling. Did you know that if all he did was get $1 raise a year from now, not even counting this year where he killed the student loan and the credit card, if all he did was get a raise next year, 50 years old, dude, he'll have the ability to make this chunk payment, and instead of paying the mortgage off in 72 months, he cuts it to 66 months. That's just under, that's 5.5 years. Plus the 6.5, plus the half a year for the credit card. 7 years, boy. Debt free at 56 years old. Retired. Debt free. He's trading on his laptop because that's what he likes to do. He's making pips every day. He's got the sun in his face. He's got life on his side. Oh man, can I preach? Get this. What if his goal is to be retired by age 51 or 52, I think he said. Right? So that gives me 2 years. Okay? For his income to increase. So let's say the third year he gets another $1 raise right before he retires. Right? He don't even tell anybody he's about to retire. But let's say he gets a raise in that last year he's about to retire. One more $1, times it by 40 hours, times it by 4 weeks, times that by 12, same thing. 1920, take tax out, $1,500, let's say. Dude, Dude, he'll have the ability to make a $10,000 $920 chunk in the third year of doing velocity banking for the mortgage. Guess what? It'll be paid off in 5 years, 60 months or less. And then the results are he would have saved over $15K in interest. That's his cushion over here for the interest that he's paying on the line of credit offsets. Basically, didn't pay any interest, right? Because I saved 15 over here over the course of the next 5 years on the mortgage. My cash flow goes up $1,202. I now have a home with a lot of damn equity in it, okay, that I can flip, right? Maybe I can go get another rental or let that thing appreciate, okay? Whatever he wants. He's got options now. He could take from the equity in his home, invest in what he knows, trading, forex, currency pairs, euro dollar, dollar yen, dollar CAD, euro pound, whichever ones he likes. He picks 4 to 5, becomes a practitioner, a master in trading. Dude, come on, man. Using other people's money to invest in himself, to produce more money, create passive income. Oh man. Debt free. Right? Debt free. 7 years. And that, my friend, is his blueprint to getting out of debt, increasing cash flow, lowering expenses, all using our own income. Right? This is gone. We don't need that there. Right? Cash flow in the thousands. Right? Now, here's where it gets interesting. He's going to have a new problem. Yeah. See, he's going to have a money problem. See, there's only 2 types of money problems. Lack of money, right? And then making a lot of money and not knowing what to do with that money. And when you don't know what to do with the money, like people who win the lottery or people who come into a lot of money, guess what? They lose it all. They live a lifestyle that matches what they're making. But this guy is smart, right? He's smart. He's going to continue doing velocity banking, right? He's going to use the cash flow that he killed from all that debt. He's going to put it into his trading account. He's going to go from trading micro to mini to a standard account, making 10 to 25 pips a day, which could equal to $2,500 a day, right? Or it could mean $250 a day or $1,250 a day. With the Forex, it's weird. It's all depends on how much you're risking per pip, right? It's either $1 per pip, $10 per pip, 10 cents, okay? And then the spread, however long he's going with it, however long he's riding with it. Now, look, he went from this. Now, I'm pretty sure you guys all know this one, right? This picture. If you don't, shame on you. Shame on you. You want to look up a guy, Robert Kiyosaki, and he'll teach you this. But basically, he went from employee straight here to investor by trading Forex, right? He didn't even go this route, and he didn't even go this route. Because this route, specialist, self-employed, 60% tax there. Employee, 40. Business owner, 20% tax. And guess what? Investor, zero tax. Zero tax. Now, that's easier said than done to pay zero tax. The way I would recommend him to pay zero tax, like I always say, man, you got to get your insurance, your banking, and your real estate in order, right? Real estate can mean a lot of things, okay? But with insurance, dude, he can get his savings asset in line so that he can continue to earn money, passive, tax-free, right? That's the no paying tax there. Here's another thing that he can do. He can set up his CRT, stands for a charitable remainder trust or a dynasty trust, right? Gets that in line. That's your real estate planning, okay? Gets some properties under his belt so he can park money in different places so he never pays any taxes, right? And he's got his trading account, just, it's a machine now. It's just, he logs into that thing for 30 minutes, an hour, plays the game, leaves the game, puts his money in things that produce income no matter what, right? His activity income is the Forex trading. His passive income is the asset that he creates, right? I can help him here getting the savings asset in line, right? That's the insurance part. Charitable remainder trust, that's on him. He's going to have to look for, a good attorney, lawyer to really make that happen. That goes into building your team, right? Or a dynasty trust, right? And that just creates this shield around your wealth, guaranteed legacy behind for the family. And my friend, my guy, is living the life. So look, if you enjoyed this video, my name is Denzel. I'm an entrepreneur. I'm here to serve you. I want to put your numbers on the board. If you are in financial troubles, you need help, you need assistance, I have a form that you can fill out. It's a very easy form, okay? And that is a way for us to connect, build some trust, get you to know, like, and trust me, right? For me to put your numbers on the board, show you the blueprint, where to go, how to get there, right? And ultimately, I want to become your friend, honestly. If we never do business together, that's fine. But as long as I'm able to have a real relationship built, real rapport, genuine service, genuine giving, I will be fulfilled, and I'll continue to do this, to continue serving you every single day moving forward. All right? So enjoy the rest of your day. Thank you very much.